What is index fund investing? Good question. Index fund is a tool that seems magical, but has many hidden benefits. Rich Horse will explain everything. Rich Horse sees many horses getting lost trying to pick individual stocks, like trying to find specific hay straw in enormous stable. Later, they realize index fund was easier path all along. Let's understand how this investment method works and why it makes horses wealthy over time. How the system works like this. Horse wants to invest oats but doesn't know which companies to choose. Too many companies in pasture, too confusing. Instead of picking individual companies, horse buys index fund. Index fund is like big basket with pieces of many companies inside. When horse buys one share of index fund, horse owns tiny piece of hundreds or thousands of companies automatically. It's like buying entire stable instead of individual horses. Horse doesn't need to worry about which specific horse runs fastest. Horse owns small piece of all horses in stable. If stable does well over time, horse investment grows. Much simpler than trying to pick winning horses one by one. The Diversification Magic Index Fund gives horse instant diversification. Instead of putting all oats in one bucket, horse spreads oats across many buckets automatically. If one company fails, horse barely feels it because horse owns tiny pieces of many other companies too. Think about it like this. Horse owns 500 different companies through index fund. If 10 companies go bankrupt, horse still owns 490 good companies. But if horse picked just one company and it failed, horse loses everything. That's like putting all hay in one corner of stable. Very risky if fire starts there. Low costs. Keep More Oats index funds have very low fees compared to actively managed funds. Active fund manager charges high fees to pick stocks, like hiring expensive trainer to select individual horses. But studies show most trainers can't consistently pick better horses than just owning entire stable. Index fund charges tiny fee, usually less than 0.1% per year. Active fund might charge 1% or 2% per year. Seems small, but over decades this difference becomes enormous. Horse paying high fees loses significant portion of wealth to fund company instead of keeping it in own stable. The power of market. Returns stock market historically grows over long periods, despite short-term ups and downs. When horse owns index fund tracking entire market, horse captures this long-term growth automatically. Horse doesn't need to time market or pick perfect moments to buy and sell. Over past century, stock market averaged roughly 10% annual returns before inflation. Some years market goes up 30%, other years it drops 20%. But patient horse who stays invested for decades typically sees wealth multiply many times over. It's like planting apple tree. Takes time to grow, but eventually produces abundant fruit. Dollar cost averaging. Strategy smart horses invest fixed amount every month regardless of market conditions. When prices are high, horse buys fewer shares. When prices drop, horse buys more shares with same amount of oats. Over time, this averages out to good price. This removes emotion from investing. Horse doesn't need to guess if market will go up or down next month. Horse just keeps investing consistently, like steady rainfall that eventually fills pond. Market volatility becomes friend instead of enemy because horse buys more shares when they're cheaper. Different types of index funds. Horses can choose from many types of index funds. Total market index funds own pieces of entire stock market. S&P 500 index funds own 500 largest companies. International index funds own companies from other countries. Bond index funds own government and corporate bonds instead of stocks. Each type serves different purpose in horse portfolio. Young horse might focus on stock index funds for growth. Older horse approaching retirement might add bond index funds for stability. Wise horse often owns mix of different index funds to spread risk across asset types and geographical regions. The compound interest effect. When index fund pays dividends or grows in value, smart horse reinvests everything back into more shares. This creates compound growth, earning returns on previous returns. It's like stable, where horses give birth to more horses, and those horses eventually give birth too. Early years might seem slow, but compound effect accelerates over time. Horse investing $500 monthly in index fund earning 7% annual returns will have over $1.3 million after 40 years. Most of that wealth comes from compound growth in later years, not from horses' monthly contributions. Tax efficiency. Benefits: index funds are more tax efficient than actively managed funds. Because index fund manager rarely buys and sells individual stocks, fund generates fewer taxable events. Active fund managers constantly trade stocks, creating tax bills for all investors in fund. Horse investing through tax-advantaged accounts like 401k or IRA gets even better benefits. Horse can let index fund grow for decades without paying taxes on gains until retirement, when horse likely has lower tax rate. It's like storing hay in special tax-free barn that government can't touch. Common mistakes to avoid. Biggest mistake horses make is trying to time market. Horse sees market dropping and gets scared, sells everything. Then horse waits for right time to get back in, but market already recovered. Horse misses best days and hurts long-term returns significantly. Another mistake is chasing last year's winner. Horse sees growth fund did great last year, switches from balanced approach. But markets rotate. This year's winner often becomes next year's loser. Patient horse sticks with diversified index fund strategy through all market cycles. Building your index fund. Portfolio Smart Horse starts with broad market index fund as foundation. This gives exposure to entire economy in single fund. As horse accumulates more wealth, can add international index fund for global diversification and bond index fund for stability. Simple 3-fund portfolio works well for most horses. Total Stock Market Index Fund, International Stock Index Fund, and Total Bond Market Index Fund. Horse adjusts percentages based on age and risk tolerance. Young horse might use 80% stocks, 20% bonds. Older horse might prefer 60% stocks, 40% bonds. The psychology of index investing. Index investing requires patience and discipline, qualities not all horses possess. During market crashes, horse sees portfolio value dropping and panics. Natural instinct is to flee danger, but in investing this instinct often causes harm. Successful index fund horses develop long-term mindset. They understand market volatility is normal and temporary, but market growth over decades is historically reliable. They focus on time in market, not timing market. This mental approach separates wealthy horses from those who never build significant wealth. Starting your journey. Horse ready to start. Index fund investing should first build emergency fund of 3 to 6 months expenses. Then maximize any employer 401k matching. It's free oats that horse shouldn't leave on table. After that, horse can open low-cost brokerage account and begin regular index fund investments. Start small if necessary. Even $50 per month invested consistently will grow substantially over decades through compound effect. Important thing is starting habit of regular investing, not amount. Horse can increase contributions as income grows over time. Why index funds beat? Most alternative studies consistently show that index funds outperform majority of actively managed funds over long periods. Fund managers who beat market one year often underperform next year. Very few managers consistently beat market after accounting for fees. Index fund doesn't try to beat market. It tries to match market returns at lowest possible cost. This boring approach consistently beats exciting stock-picking strategies over time. It's like steady plow horse that works every day versus flashy racing horse that only occasionally wins. The network effect of patience horse, who understands index fund investing and sticks with strategy, often inspires other horses to follow similar path. Wealth building becomes contagious in positive way. Horse family that invests consistently in index funds often breaks generational poverty cycles and builds lasting wealth. Rich horse has seen many horses transform their financial futures through simple index fund investing. No special skills needed, no complex strategies required. Just consistency, patience, and faith in long-term growth of human innovation and productivity. Index fund investing is not get-rich-quick scheme. It's get-rich-slowly approach that actually works. Horse who starts early and stays consistent will likely achieve financial freedom. Horse who keeps looking for shortcuts often ends up working until old age. Choice belongs to each horse. Remember always, market rewards patient horses, not clever horses. Index fund is tool for patient horses to capture market returns without trying to outsmart system. Share this knowledge with other horses and subscribe to channel to learn more about building wealth in pasture.